Have you ever heard people say, we're in a bull market or the market just entered bear territory? It's enough to make your head spin, right? But what does that actually mean? And why does it matter for investors like you? Listen, understanding the difference between a bull market and a bear market is like knowing the difference between a buy signal and a sell signal. It's crucial if you want to make money in the stock market. You wouldn't jump into a boxing ring without knowing how to throw a punch, would you? Today we're breaking down bull and bear markets, how they work and how you can navigate them as an investor. We're talking profits, people, so buckle up, get ready to ring the register because it's time to make some money. Alright, let's talk bulls. In the stock market, a bull market is like that friend we all have. You know, the one who always sees the glass half full. Optimism is in the air, people are feeling good and the economy, humming like a well-oiled machine. Now, we're not just talking about a good day or two in the market, we're talking about a sustained period of rising stock prices, typically 20% or more from recent lows. This isn't some penny stock rally, folks, this is the big leagues. Think of it like a snowball rolling downhill, gaining momentum as it goes. Companies are raking in profits, investors are pouring money in, and the whole market seems to be moving in one direction, up. But what drives this bullish behavior? Well, a strong economy is a big factor. When businesses are booming, unemployment is low, and people are spending, it creates a ripple effect that sends stock prices soaring. And let's not forget about investor confidence. In a bull market, investors are like kids in a candy store, eager to snatch up shares of companies they believe are poised for growth. They're seeing dollar signs everywhere, and frankly, who can blame them? Think about it like this. When you believe in something, when you see its potential, you invest in it, right? Well, in a bull market, investors are putting their money where their mouths are, driving up demand and pushing prices higher. But here's the thing about bull markets. They don't last forever. Just like that friend who's always upbeat, even the most bullish market eventually takes a breather. That's why it's important to stay informed, to keep your finger on the pulse of the market, and to know when it might be time to adjust your strategy. Remember, in the stock market, just like in life, it's all about timing. Buy low, sell high, that's the name of the game. So keep your eyes peeled for those bull market opportunities, but always remember to invest wisely. Okay folks, now let's talk about the flip side of the coin, the dreaded bear market. Remember that optimistic friend we talked about earlier? Well, in a bear market, that friend has suddenly turned into Eeyore from Winnie the Pooh. Gloom and doom are the order of the day, and the market? Well, let's just say it's not pretty. We're talking about a prolonged period of falling stock prices, typically 20% or more from recent highs. This isn't just a dip in the market, folks, it's a full-blown correction. Investors are running for the hills, companies are tightening their belts, and the economy, let's just say it's caught a cold. Now, bear markets can be triggered by a whole host of factors, from recessions and economic slowdowns to geopolitical events and, dare I say it, pandemics. These events can shake investor confidence to its core, leading to widespread selling and a downward spiral in stock prices. Think of it like this. When you're worried about the future, when you're not sure what tomorrow holds, you tend to hold on to your money, right? Well, in a bear market, investors are doing just that. They're pulling back, hoarding cash, and waiting for the storm to pass. But here's the thing about bear markets, they're not all doom and gloom. Sure, they can be scary, but they also present opportunities for savvy investors. Remember that old saying, buy low, sell high? Well, a bear market is the buy low part of that equation. When prices are down, it's a chance to scoop up shares of great companies at a discount. It's like a clearance sale at your favorite store, except instead of clothes, you're buying pieces of businesses with the potential to rebound and soar to new heights. Now, I know what you're thinking, but Jim, how do I know when the bear market is going to end? And that's the million-dollar question, isn't it? The truth is, no one can predict the market with 100% certainty. But there are signs to look out for, signals that the worst may be over and a rebound could be on the horizon. So don't let fear paralyze you. Use this time to do your research, identify companies with strong fundamentals, and be ready to pounce when the market starts to turn. Remember, fortunes are made in bear markets, not just bull markets. Chapter 3. Listen up because this is important. You're sitting there wondering, how long will this bull market last? Or, when will this bear market finally end? Am I right? Well, I'm here to tell you that there's no magic 8-ball, no crystal ball that can predict the market's every move. But, and this is a big but, We can learn from history. We can look back at past bull and bear markets to get a sense of their average lifespan. And what does history tell us? Well, it tells us that bull markets tend to be like marathon runners, while bear markets are more like sprinters. On average, bull markets have lasted longer than bear markets. We're talking years, folks, years of growth and prosperity. Think about the dot-com boom of the late 90s or the bull market that followed the 2008 financial crisis. These periods of growth, while not without their bumps along the way, lasted for years, creating incredible wealth for those who invested wisely. Now, bear markets, on the other hand, are a different breed. They tend to be shorter and sharper, like a punch to the gut. But remember, even the most ferocious bear eventually runs out of steam. The average bear market has lasted around 1.4 years. That's significantly shorter than the average bull market, which has historically lasted around 2.7 years. Now I know what you're thinking. Jim, 1.4 years still feels like an eternity when my portfolio is bleeding red. And I hear you, I really do, but here's the thing. Understanding the historical context of bull and bear markets can help you stay the course, to avoid making rash decisions based on fear or panic. Remember, time in the market is more important than timing the market. So, what does this all mean for you? It means that while we can't predict the exact duration of any given bull or bear market, history tells us that bull markets tend to outrun bear markets. It means that staying invested for the long haul, through thick and thin, is the key to building lasting wealth. Chapter 4. Alright, let's cut to the chase. You've learned about bull markets, those exhilarating climbs where everyone's a winner. You've faced the reality of bear markets, those gut-wrenching drops that test even the most seasoned investor. But now comes the real test. How do you invest in these ever-changing market conditions? The answer, my friends, lies in having a strategy, a game plan for both the sunny days of a bull market and the stormy days of a bear market. You wouldn't climb Mount Everest without the right gear and a well-thought-out plan, would you? The same principle applies to investing. In a bull market, it's easy to get caught up in the euphoria. Everyone's making money, stocks are soaring, and it feels like the party will never end. But remember, what goes up must eventually come down. That's why it's crucial to stay disciplined, to stick to your investment strategy, and to avoid chasing those high-flying, speculative stocks that are all sizzle and no stake. Instead, focus on companies with strong fundamentals, solid earnings growth, and a proven track record of success. These are the companies that will weather the inevitable market storms and emerge stronger on the other side. Now, when the bear market hits, and trust me, it will hit, it's time to put on your bargain hunting hat. Remember those solid companies we talked about earlier? Well, guess what? Their stock prices are likely down, which means it's a prime opportunity to buy low. Think of it like this. The market is having a fire sale and everything is marked down, but instead of buying clothes or electronics, you're buying shares of companies with real value, companies that are poised to rebound when the market eventually recovers. But here's the key. Don't let your emotions get the best of you. It's easy to panic when the market is in free fall, to sell everything and run for the hills. But remember, fear is a terrible advisor, especially when it comes to investing. Instead, take a deep breath, stick to your strategy, and focus on the long term. Remember, bear markets are a natural part of the market cycle. They're opportunities to buy low and position your portfolio for future growth. So, whether you're riding high in a bull market or navigating the choppy waters of a bear market, remember this: success in investing is not about timing the market perfectly, it's about time in the market. It's about having a plan, staying disciplined, and investing in companies you believe in. There you have it. You're now armed with the knowledge to decipher those cryptic market pronouncements. No more deer in the headlights looks when someone yells, "bear," on the trading floor. Now that you know the difference between bull and bear markets, how do you think we're doing right now? Are we in a bull market or a bear market? Let me know in the comments. Remember, knowledge is power, and in the world of investing, that power translates into profits. So stay informed, stay invested, and as always, may all your trades be winners. Don't forget to like the video, subscribe to our channel, and share with friends to stay informed. Happy investing!